Happy Sunday, everybody. I'm Rob Booker, and I'm just sitting here looking through some charts on the old iPad. iOS allows you to record the screen, which is absolutely brilliant. So I wanted to share with you some charts that I'm looking at on this very Sunday and some new ideas for robot stuff that I'm thinking about. All right, the first thing I want to take a look at is this Australian dollar Japanese yen. I think this is really interesting for a couple of reasons. First of all, we had a downtrend, and it all started with like an impulse wave down. Then we had a corrective wave up, and I think a lot of people thought this was going to make new highs because this currency pair is really correlated with the U.S. stock market, and that the U.S. stock market would rise and the Australian dollar Japanese yen would rise with it. And as you know, the U.S. stock market's been doing really well. However, that was just corrective wave number 2 leading to an impulse wave number 3 that was the next leg down in the trend, and then we had a corrective wave higher. Once again, I saw a lot of people say, oh, the Australian dollar Japanese yen super correlated with the stock market, that's going to make new highs. No, it didn't. And then that corrective wave number 4 led to a number 5 down. Now, we sort of saw this coming because we saw a breakout box. This green box you see on the chart right here, we drew that because the ADX went below 18, which was a sign that the market was coiling up really tight and getting ready for a breakout. And then we broke out higher. That was a fake move. We thought we would get to the weekly pivot, and then we corrected lower, and now we're down here, and we've sort of gone below that original box. We've made a new box the same size as the original one, and now we're kind of at a good stopping point on a U.S. holiday tomorrow, and this would be a great time to start looking at and considering that this currency pair is either going to go sideways now, or we're going to have a bigger move upward. And keep in mind, the U.S. stock market has made all-time highs, and the Australian dollar Japanese yen, which is highly correlated, has been moving down. That's odd. That's not supposed to be happening. One of the two things has to happen. The U.S. stock market has to fall, or the Australian dollar Japanese yen has to rise. So if the Australian dollar Japanese yen starts to rise, that's really bullish for the U.S. stock market and risk assets in general. However, if this starts to go sideways or lower, then you need to watch for this S&P 500 to have a mighty and significant correction lower, halfway the distance to last week's pivot, which lines up with the pivot point from October 3rd or 4th at about 132. That's the S&P E-mini futures. So that's the first thing I'm considering. And then the second thing I'm looking at is that this U.S. dollar Mexican peso has gone to ludicrous levels on the ADX. So the trend has been outrageously strong. Plus we went overbought on 5 time frames simultaneously. So I'm looking for this to move halfway the distance down to the weekly pivot from last week as well. That's what I'm looking at. So I hope you liked that. All week long, I am preparing the next robot. We're just on a robot run here. My friend RJ came up with a really neat robot idea for the daily charts and the relative strength index, and we're working on that right now. Thanks to Dan, who's working on that, and Andrew Palladino, who I'm going to share that with right after I wrap up this video. Thanks for being here. It's nice to spend some time with you on this beautiful October day. I love you all, and I will see you this week.